fuck out of bed, bitch. Go. Get up, again, they got go. Time to wake up, bitch, get up. Get up, get up.
GM, you all. This is the $1 Trade Show. I'm Diego and this is Nick. Welcome to one more episode of the show. Today we are going to cover everything that's going on prediction market, as always, with a special discussion here about poly market on the stock exchange in the US. So how you doing, Nick? Good morning, bro. No, you're muted. You are muted. No one can hear you.
That's because I didn't want anybody to hear me sneezing. I have a cold. I'm all right, though. We're good.
Yeah,
in an interesting 24 hours with regards to, I think, ultimately the Kalshi poly market war that's going on, right? So,
it is, yeah.
So let's dive into it. Let's start.
Yes, let's get into it. Let's get started with poly market sign on the New York Stock Exchange yesterday. This is Shane Kaplan, poly market CEO, in front of the stock exchange with huge signs of poly market. So if you don't know, this usually happens when a company is about to go to launch their ICO. So
IPO,
we know
not an ICO.
Sorry, ICO.
He's so crypto native. There's not even an IPO in your mind.
Yes, initial paper offer. So basically, initial paper offer is when a company open their capital to investors. So basically, they sell part of the company in the stock exchange. So if you're not aware of that, the stock exchange is not a government branch or anything like that. So it works like a company. Yeah, it's a private. It's a private.
Yeah.
It is. Yeah, it's a private entity that organizes the markets. So basically, we discussed it yesterday how the New York Exchange made an investment on poly market, and it has everything to do with what we are seeing, and people went crazy on Twitter yesterday. Something that we want to highlight, and it always comes to this post here. So Shane Kaplan was sharing basically what looks he was in the bathroom taking a shit while he was working on poly market back like 5 years.
He didn't even take toilet breaks. He was like, I got to work.
Something like that.
I work.
Yes, I work even when I'm in the toilet. So, dude, I mean, it's amazing to see this guy succeeding, what he's doing for this space, what he's doing for prediction markets. Shout out to him. I mean, all the honors to him. It's a great thing that now to see a crypto company, a crypto native company being highlighted on the New York Stock Exchange like this.
This is just a start.
Exactly. It's freaking impressive. So this is something way more productive than saying, I mean, it's an actual business built on top of crypto rails that is focusing on the general use, so anyone can access.
It's market activity, right? Like
exactly, yes. Even if we see that they are incentivizing people for deposit for providing liquidity for some markets, there is as far as I know, there is no tricks. There are no incentive programs. There are no points. There are no hints of airdrops or anything like that. From then, at least, it's just a company, a good company building a good business, powered by blockchain technology, that's reaching out to the public, which it's amazing.
And I think part of the reason they did it, how it's working so well, is because it really does speak to something that humans deep down love. speculation.
Speculation.
Humans
Yes.
love a bit of speculation. I say people are like, oh, gambling or whatever is like, this is all immoral. It's like long time ago, our ancestors decided to make farms. That was a huge speculation bid. And look where it got us, you know? Every farmer's a speculator, putting that seed in the ground. You're going to get corn, you're going to get a yield that year, or you're not. So humans love speculation, and I think it's just perfect. This is perfect.
Yes. So let's move to this. And okay, so shout out to Polymarket and to Shane. Oh, we have something to talk about before. So about this. So as we were discussing before,
Yeah.
dude, this is amazing. This showed how Shane was grinding. But if you're building something, it doesn't mean that you are only going to succeed if you do this. And Nick has
Yeah.
something with it.
So I think there's an important thing, and our fantastic guest Julian yesterday kind of hinted at it, and I saw what he was getting at, right? This is going to become myth, right? But you need to understand, if you've been in the startup game for as long as I have, right, and you've met loads of startup founders, really competent, really great people equal as good as Shane Copeland, I'm sure, right? He didn't win because he was building an office or whatever it is in his toilet. That's not how he won, right? It's timing and luck. And everybody who invests, any big players who invest, I think, let me just get there's a dude, what's his name? Oh, Mark Andreessen, sorry.
That we
A16Z,
know
right?
from A16Z.
Right.
Yeah.
Big fund, huge character. Luck and timing is one of the things that he puts it down to. And I can't, 2 seconds, ChatGPT's being stupid. So I knew this from ages ago, but I couldn't remember what the original person was. But I ended up getting a bunch of quotes from different people. Mark Andreessen was one of them that really stood out for me. But the guy that I'm speaking about is called Bill Gross. And this is his quote. Of all the factors I studied, idea, team, business model, funding, and timing accounted for 42% of the difference between success and failure. That's huge, right? Like the rest of it is a blend of all these other things, right? Money and all that included. Here's a quote from Mark Andreessen. Timing is everything. Being too early is indistinguishable from being wrong. Totally agree with that. And Paul Graham from Y Combinator notes that luck is just being early on the right wave, right? Because there's multiple waves and systems, right? He was perfectly timed and held out long enough, right? That's an important thing. Like the longer you stick at it, it's like surfing, right? I don't surf, my cousins surf, and they talk to me about it, so this makes lots of sense when we talked about it. It's about getting the wave at the right part and letting it carry you in. And if you can stay out there long enough, you might just ride an absolute belter of a wave and just like go through the tube, and it's great.
So you need.
So I don't want builders out there to be like, oh, wait a minute, I need to do a quick pause. Hello, Rumble.
Friend from Humble.
Our friend from Rumble. Hello,
love
how you doing?
Love you,
Sorry,
bro.
right. Back to the seriousness.
Yes.
All start.
Yeah, I mean, you need to be grinding for long enough. So what we were saying? Okay, of course, you had to put the work in, and as long as you keep putting the work in, you put the chances in your favor. But there's no guarantee.
You change the probability, right? So there's no guarantee, and the wave might not come, you might not have enough resources to make it to the next wave.
Yeah.
Right. But if you can, like he's managed to figure it out, and he had support, and we'll go into that and we'll show people like how individual and special Polymarket is in a few moments. We'll go through it, but I think I can see a whole bunch of VCs, I can see a whole bunch of like startup mentors rolling this picture out, because there's been other pictures like this in the past, right?
Yeah. The guys from
rolling
Microsoft
this out and saying,
or Apple working on the garage,
and it's like, yeah, you know what? Don't give me that shit, right? Because we're not in the same wave as Shane Copeland was. Things are very different. He was literally the first. and he held on long enough. He's been in Ethereum since what, 2013? Is that what he said? Since day one of Ethereum, right? I know about 5 or 6 guys who was there early days Vitalik, right? I'm confident they've printed money, right? So maybe it was his ETH holdings that helped him carry through whatever, right? But he managed, he had the resources around him to continue building when things got bleak.
Yeah,
and that's an important thing.
Yeah,
if you don't have it, you don't have it. If you've got it, you've got it. It's not about sitting in a toilet office.
But anyway, he did it. He made it. He clearly made it. So
he smashed it. He's done a great, fucking incredible job.
All the props for him.
I hope he remains young looking.
I hope
from now on he doesn't dramatically age. Get like the stress of it all.
So this is interesting because it communicates with what you're saying. So when you are too early, sometimes it doesn't help as well. So this is Augur. Augur was actually a prediction market built on Gnosis chain. Was one of the first ICOs in 2015. They distributed tokens via email, which it's less than 99%. I mean, it's just that. The team tried unsuccessfully for 3+ years, pre-RPC wallet APIs to build a basic web app on it before soft rugging. So tech adoption takes longer than you think. So basically, what Augur was trying to make was a kind of a betting platform on top of Ethereum. And they were using...
Polymarket was second wave then. So first wave was Augur. Second wave was Polymarket.
There was not even infrastructure back then. That was the thing.
Building apps back then, like salute to any dudes that were trying to build on Ethereum back then. There was nothing. You had no chance. You had no chance.
That's
but
the thing.
Thank you for building the roads. Somebody got to lay the roads, right?
Exactly. So no RPCs, no wallet APIs, no social logins or anything like that.
Nothing.
And even to build on
wallet abstractions,
nothing. So when Polymarket started to build on Polygon, there was no Arbitrum or Optimism or Base. There was no layer 2s back then. So Polygon was the only cheap option to build an EVM chain. So Defiance is just highlighting here. Based on this post of Polymarket on the New York Exchange, he's saying, okay, as part of ICE's $2 billion investment in Polymarket, they will, which means Polymarket will distribute thousands of financial institutions, their data to thousands of financial institutions worldwide. So it highlights what is the business model of Polymarket. It is prediction markets, of course, but yes, why prediction markets? Prediction markets is a tool to gather data. And Polymarket talks about itself as a news medium, as a news outlet. So they need data, so they can use their users to gather data from the wisdom of the crowd, and then they can do whatever they want with this data.
And where else we see this somewhere else, and it actually is a bit of a negative connotation, but it's important for people to understand. This is Robinhood. This is what Robinhood do. They don't charge fees, so you use your platform. They take the data flow and resell it. For example, Citadel, if you know the GameStop thing, that's why trading was halted, because their big data partner that they were selling data onto was getting creamed, and they halted trading around GameStop. Right. So important to know that it comes at a cost. Just because you're not paying for fees, you might be paying in some other way later on.
So this is not a bad idea when a protocol turns on the fee switch, so you know that you are paying for the product. Otherwise, you will be the product, or at least your data will be the product here.
There's no distinction between you and your data.
Yeah, I mean, no judgment. I'm not saying that this is
it's not a bad thing.
Essentially bad.
That's what it is.
It's the business model, and we need to understand how it is. So, but being on chain, you can grab the data yourself. So, introduction Polydata. We've been mentioning Polydata here. It's a great website, and it was created by Primo Data. It was an independent website. It was not related to Polymarket itself.
Is this a paid post?
What?
I wonder if this is a paid post.
I don't know. It doesn't seem to be.
No. Relatively
yeah.
informative, though.
Yeah, so an open source Rebel for collect, store, process, and update the most interesting data in the world. So basically, this Poly data does not only provide data from Poly markets, but also from Cauchy and Limitless right now. So stores markets and order filled events in a single CSV. So turning opaque events data into price and volume that any research. So if you're into data research or data analysis, that's a great source of information together with Doom, of course. Include the store CSVs are charted on bracket with customized charting module. Props Supremo data, 0x feds to helping me parse the events. So yes, we covered this before, and yeah, shout out to Primo Data. It's the guy, the data analyst who created this. And by the way, yesterday he just shared the top leaderboards from Polymarket. So there was an update on leaderboards, and basically you can see more from these if you like to check the data in details with Polydata, which is a great source. So moving to a funnier part of this. This is amazing. This is from yesterday's. Still, if I okay. Let me know if you can see.
No, it didn't full screen.
No, when I go full screen, you can't see.
No.
Oh shit!
You see the guy dancing. I can see him dancing.
Yeah, okay. You guys can see him
But it's
dancing.
just a wee body. Just wee body dancing.
Yes, just that. I mean, some people happy, and of course, beautiful girls passing by, paying attention. Everything powered by crypto in the end. That's the take here. And then it comes what is interesting. So Pink Punks was saying, yes, Poly Market will be the biggest airdrop in history. Yes, you need to be farming it. And yes, you need to follow accounts that know what they're doing. Okay, so we disagree with this. I mean, we highlighted here before how I don't think Polymarket actually needs a token, and what I think could be an eventual token could be used for. Actually,
pause for a moment and talk about what tokens are usually used for in some way or another, right? They're usually used for raising cash. So they have pre-sales to VCs. They give them the token allocation so they can get money in and build. They're beyond this right now. Like they've raised over $2 billion this year. They no longer have a need to take money from people to raise cash. So I'm like you're about to say, don't understand the utility and need for a token on Polymarket, or like basically because they don't need runway. They're unlikely to go governance, right?
Yeah, something that we discussed in last week, I think, is maybe a governance only for a resolution system in case it decides to go away from UMA.
UMA, yeah.
Right? Because, I mean, Polymarket will be way bigger.
This is also not working on UMA like 100% of the time.
Yeah, so the idea on this is, imagine if Polymarket gets huge compared to what it is today. And imagine you are about to resolve a market that sits on billions of dollars. And Yuma TVL is smaller than the market itself you're about to solve.
Yeah.
So you would have financial incentives to buy Yuma tokens so you could attack Yuma and use those tokens to decide the market in the end, to control the market resolution. So in this situation, we could see a use for a Polymarket token, but it's way more complex than that because we will need to see a resolution system tied to that token, and that token value tied to actually the market value, or with Polymarket as a whole value.
Or at least we think that's what it would be. There might be other ways.
Yeah.
This is just our opinion, and we may be really
wrong.
fucking wrong and not get any airdrop or anything. That's not true because we actually use Polymarket.
Yes.
I use it very little, but because I'm so shit at trading right now.
with a few cents. I mean, placing dollar bets there.
Yeah,
So probably your airdrop wouldn't be valuable. But
minimal,
anyway,
minimal.
yeah. Anyway, dude, 6,000 views, 330 likes. This is what people like to. I mean, people like the hopium. People like the hopium. I mean,
Yeah, they love the whole
talk
team.
true,
Crypto's
if you
built on
talk the
it.
truth, people will not care for that. But people want to see that. See, this is what.
And
This
here we
is this is
go.
comes. Yeah,
Cook's
this is
coming in.
comes.
We speak about Cook quite often on this show because he actually has some really good insights. We just don't know, like, where in the spectrum of Schiller and legit KOL he lives right now.
Dude, I'm going to create a mention market for us here. How many times will Nick say Cook, and how many times will I say John Wang in a week time span? That would be
In a
fun
week.
because it's just Cook and John Wang. But okay, I hate these VCs back at Boomer Brute Force. Joint job to take over crypto Twitter and try to convince everyone prediction markets are somehow crypto.
Now, the
Because
interesting thing about that statement is he is not just referring to Polymarket and he is not referring to Kalshi
no,
directly. And I'm not entirely sure what one he is referring to. And I think that's obviously deliberate from his point of view, right? But we might, if we look at the comments, we might see something else. That
so
that that description there, you would immediately think Kalshi, but obviously we all know that Polymarket has taken tons and tons of money now, like buckets and buckets of it
yeah,
from VCs.
so they bought every 70 IK KOL for a McDonald's wage. It's disgusting. Yes, everybody's talking about the amount of
I get
money
what he's
people
got. Like
get paid. I mean,
I don't fully disagree. Like they came in, they've hoovered up every KOL from like the 200 followers to the 100,000 sort of followers. It's a bit insane
yeah.
between the both of them. They've both did that.
So you are not farming a token. You will never own anything. This gets to our
This is a
point here.
strong statement.
Yes.
This is a strong
You're
statement.
just smashing buttons juicing a $20 billion valuation from boomers that will IPO and dump on TradFi retail. Dude, I gonna keep this one saved for the future.
Yeah.
The worst thing about it is you can't get rich. Oh, what you're going to be the best predictor in the world? You're gonna predict 10,000 retarded in real life events in a row for 2 times each time?
So
If
I
you,
get where he's
I
coming
mean,
from on this, right? You can't. It's not like meme coins or tokens,
there's
but
a limited
also
upside. Yeah.
there's not as much abuse, and I think he has actually benefited quite massively because we know he's on paid KOL lists, right? That's a known thing, and he has massively profited from that. And we all know that anybody who's in early, everybody else afterwards is exit liquidity. So he's talking about a double-edged sword here. He's been
Yes,
involved in
he's
draining liquidity from people, and at the same time he's calling out all these other people who aren't actually likely to cause as much damage as the meme coin industry has.
there is some bias here for sure. There is some
Yeah,
bias, and we highlighted this. Though these guys who are, let's say, working for Kaushi and Polymarket, they are getting paid for the companies. They don't have a
yeah,
referral code, so they don't own more money because you're using their links. There are no links out there. But when you get into meme coins early enough, you can
yeah.
just dump on. I mean,
And he
that's
does because he gets offered deals before, like he gets allocations and deals, right?
yeah. Dude. I mean, don't as people say. I mean, don't judge the player, judge the game. It
Yeah,
is
yeah.
what it is. It is what it is. So if you farmed Hyperliquid early, you made a billion and you won the platform. And Hyperliquid was really betting on these referral links, right? I mean, a lot of people started to because
Yeah.
referral is the program, it's a points program. So you bring more people, you get more points, and that's it. So eventually you don't need. Go ahead.
Somebody else is back from Rumble. Hi again.
Hi, Rumble
Okay, back
people.
in it.
So,
This is my running joke.
but I mean, basically, you don't need. So if you are an influencer, if you have a big YouTube audience, Instagram, Twitter, whatever, you don't even need to put skin in the game, your capital. You put your name, which rules I mean, you put your name, you bring people in, people get a little bit of money, and you get tens of thousands of dollars just by sharing your link, which is a work. I mean, it's part of the job.
Oh,
But
it is.
we are
It
highlighting
requires
this
quite
just so. Yes,
it's attention,
I think
right?
the point. Yes, I think the point here is when we talk about this kind of situation, we are not judging, saying, "Oh, this is bad, this is wrong." We are just trying to communicate to you. I mean, if you're this small guy, I mean, you understand what's going on, so you don't think, "Oh, these guys are amazing. I'm going to follow these guys because I'm going to be rich because they are so good." No, man, this is the work they do because that's what paid their bills. So if you bought Fartcoin early, you made $1 billion. If you know you didn't, this is wrong. You got Fartcoin.
He made $1 billion.
If you spent $500 with Fartcoin, when that shit got to $10,000, you sold that. You didn't make $1 million.
Possibly. Yeah.
Of
But he might
course,
have,
man.
because he would have been in
He
early,
made it.
right? I presume that
Yes,
if he
made it.
didn't have the alpha through his network, he was offered the deal directly in front of him, right?
Yeah.
Because we all know who's on the.
Nobody. Dude.
For anybody that knows, we have seen the KOL lists. We have been offered them. We know who they're all.
Yeah.
We know.
And it's expensive.
Right?
It's expensive to hire them.
It's expensive, right? And then
It's
also, like, other
expensive
people
to
have
hire
published lists, but we're not going by the ones that were on Twitter. We're going by what we were given by people, by
Okay.
KOL managers, right?
Maybe my bias is I'm envy because I don't have money to pay for them.
I'm pissed. I fucking hate him because he's fucking rich.
Yeah, he's
got a big audience. I hate that motherfucker. No,
that's it. That is my bias, guys. That is.
It would take a lot for me to hate anybody, really. I'll be frank. There's no point in hating people.
There is not. So if you learned to speak Chinese last week and aped some random coin, you made $1 billion. Okay. If you learned to speak Chinese last week, okay, I think it takes more time than that.
I think no. Some people were playing around with this shit. I think they were using ChatGPT to try and figure out what was going on in the forums or the Discords or whatever it is, and try to trade on it. I think Clementi also made a video like this the other day, and he's just like he's got like ChatGPT in front of him, and he's got all these like Mandarin symbols up, and he's trying to like figure out what's going on, trading it. Funny as fuck. Crypto is really funny sometimes.
It's funny. It's like a casino a lot, So, but people don't even need to be drunk to play this. So there are more examples like this in crypto every single week. More and more and more. There's no opportunity in prediction markets. I said that yesterday. Dude, there's markets and opportunity. They never should be on the same sentence. There's no opportunity. There's someone manipulating you all the time. There's no opportunity. Something that is good for you, you need to go after that shit. You don't open your phone or computer and you see a post and, oh, there is an opportunity for me. No, you're not special. You're going to lose money.
I get a lot of those job opportunity messages on Telegram.
Oh, shit.
They're not opportunities. But I know what he's saying, right? Like, it's what he's talking about is what we spoke about last week, I think it was, when we were saying, I don't know if we spoke about this publicly because Diego and I obviously talk quite a lot. And that's what it was, because we were talking about 1x, 2x, blah, blah, blah. All that stuff. And you were like, you can't go above what was it?
I mean, if
you cannot make more than 100% on a prediction market, right?
No, actually,
you can't. Not in a trade.
No, I mean you can.
Well, no, you can.
I mean,
you
buy tokens.
You can't.
You buy tokens.
2x, 3x, 4x, 5x.
Yeah, you buy tokens
because
for 5
cents.
It
doesn't continue to go.
It doesn't, but there's a limit.
Oh, I wish I remember that conversation better.
Yeah, but basically, I mean, there's a limit. There's an upside. When you buy a token, when you buy stock, there's no limit to the upside. But there is a limit with upside because your token can only worth $1 in prediction markets. So, okay, if you got that 1 cent, which is not likely at all, but if you got that to 20 cents, 1x is 40, 2x is 80, and 2.5x. That's it. I mean, that's it. This is why people are so running for build. How can we leverage these products?
Because that's where
Yes, that's
once you add leverage to prediction markets, it becomes a totally different beast, and that's why we're seeing a lot of these tools starting to emerge. There may be, and I don't think any of them are really live right now, but there's a lot of we're bringing leverage to Polymarket.
Yeah,
because that's what it needs. It needs a leverage.
Yes, so you can make more money. I mean, if
or
you're
lose
good,
more money, because
or you
apparently
can
only
lose more.
13% of people on Polymarket actually win.
We covered this
Or is
on
it? Yeah,
Monday.
and covered this the other day. If you
Yes,
missed that and you're just tuning in, you should tune in every day.
yes,
You
that's
won't
it.
miss it.
We had Arseni
Almost.
from Gondor a couple of weeks ago or last week.
Yeah.
Time is flying so fast, I don't
Yeah,
recall.
we should get him back in a few weeks and see like where
Yeah,
they're going
when the
and
protocol
chat.
goes live. So basically, what they are building there. So you open a position on Poly Market, that position worth something, of course, because it's an asset that you deposit there, and you can borrow money against your position on Poly Market. Then you can buy more positions on Poly Market. You can get more tokens, so you deposit there, and you keep doing this forever almost. So any KOL shitting you, this dog shit does not care about your well-being. That's what I said. Okay, it's exactly. I agree with you. They are collecting a Guatemalan minimum wage to screw you. I will never forget. No, they don't want to screw you. They don't want to screw you. But
Yeah,
you might screw
it's
yourself
language.
if you don't know.
This is what
Yeah.
KOLs do. They use hyperbolic language to be able
Mhm.
to. It's kind of like you and I. We're just like, yeah, whatever. It's
To make a point.
neither up nor down. It's a thing that's happening. But KOLs, they have to use hyperbolic language. It's part of the deal, I think.
Yeah, but this is going to be really interesting. I mean, when or if we see Poly Market ICOing like Coinbase and not launching a token.
Yeah.
And
Zoom in. We need to zoom in on this because
talking about Poly Market here, this is
we
what
maybe should have brought this in when we were talking about like how startups like grow and stuff like that. So if you're new and you've never done a startup, the people who invest in you are incredibly important because they allow other people they give other people the confidence to invest in you. So if you end up with like some really nice VCs, like well-known VCs or well-known people, it's much easier to raise money with other people after that. So I think up until this year, Polymarket had raised like 74 million or something like that. I'm sure we can see that in there, but
let me
but
tell
if we
you,
look in this list,
let me tell you a
there's
really
one
short
person who
story.
really stands out, right?
Vitalik,
who really stands out in this list? Vitalik invested in. So if you go to anybody, and it wasn't the first, I don't think he was the first Series B, he was Series B. Who was Series A? Who was Series A? Can we find
there's
it?
precede here somewhere. Okay, let's go. Just a second here. Financial details. I don't know this website. It's
you keep running away. There you go.
Funding rounds. Okay, there was a seed round.
And if you go to the right, you'll see how much.
4 million.
You go. There you go. So Vitalik was in the 45 million round. So they did a seed round of 4 million. That's an incredible amount of money. Now that would be some amount of money, a good amount of money. But back then, that was an incredible amount of money.
Yeah, 5 years
ago. And then
they
did even more and even more. So remember this, guys. Like you need money to give you runway to buy you more luck. So you can catch the next wave. But they could, I feel like maybe not 2020, but like they just kept catching the wave, right? As far as I'm concerned, he's an awesome surfer.
Yeah. So
that motherfucker can surf.
They had raised 124 million so far, and now they got 2 billion more.
Dude. No, that can't be true. Is it only 100? Because I thought they raised 200 million earlier this year.
Could be.
And don't forget, Donald Trump. The Trumps are in Polymarket too, so they have a lot of people circling around them. The Trumps are also in Kalshi. If you did.
Donald Trump Jr. here, yes, that's true. So just if you're listening to us, let me tell you a really quick story. A friend of mine is building on crypto, and basically when they talk to VCs, people just, okay, dude, I like this idea. This looks pretty cool. Who's investing in you? Oh no, yeah, we are talking to people, but no one. Okay, reach out to me when someone invests, so I can give you some money. That's it. No, I like.
Is this a friend in crypto, or is this an actual conversation that you may have been involved in?
It's a friend in crypto. I cannot confirm or deny. I cannot confirm or deny
I just want to give a
anything.
shout out to our repeat viewer who is in our chat on X. Levy, how you doing? We see you create markets. Hello.
Thanks, bro. Yeah. So, by the way, go to the playground.groovy.markets and create your market. I mean, try it out.
And
Let us know what you think.
one other thing is, do you want to do? Have you got the Clash of the Fans?
Bam.
Okay, so this is a good point. We need to work how we display this so it looks better and doesn't have this bit. But we're doing a Clash of the Fans, so we are like the super fan prediction market, right? Like we are for like grassroots guys. See the guys who just love like how many times some guy's going to touch the ball in the game. Those sort of markets. I jokingly, if it was where I'm from, how many people are going to be arrested after the game? You know, it's like that. These sorts of markets are the fun markets. So this week, we are running the Liverpool Man U because that's the next big game next week, and we're giving away some prizes. And so you just join in. You'll be asked to participate, like in the platform, create your own markets. It'll be fun, right? Like it's going to. Oh, there's the actual tweet. There you go. Can you zoom up so you can actually see? Zoom up.
See.
Then zoom up. Scroll up. What am I, fucking old man? Up. There we go. So it is. We're for the diehard supporters, right? You can create a market on anything. You can create a market on what chants will be chanted during and how many times those chants would be chanted. You know, like this is the fun of it, just for you and your buddies.
Just one thing: don't create a market on how many times the guy will touch the ball during the game, because that doesn't sound polite at all. I know what you mean, but that doesn't sound cool at all, man.
I think that's supposed to be getting lost in translation.
Yes, probably that's the case.
Basically,
my head is fucking. I don't.
We have been in a startup for like 10 months, so that would.
You speak in English. You speak in English. I hear something else in my mind.
Yes, exactly.
Yeah,
touching balls in Portuguese seems to be something that we don't talk about. I don't know.
Yes, I remember when I was when I was in the US, they have the Racky Sacks. Racky Sacks is just something that it's like a soccer. You kick a little.
Oh, the little balls, hacky sacks.
Little balls, yeah. I said, okay, the Racky balls. And the girl started laughing at me like it was an idiot. Okay, Racky Sacks, Racky ball, what the fuck? It's the same thing, no? Anyway, let's move forward. You guys don't need to listen to me talking gibberish here. So, okay, we have Semaj 8 here. Yesterday, we highlighted that he posted the second part of the liquidity problem in prediction markets. So we are coming back. So we are going to talk about the first part. This is the first of a 5-part article that he's writing, and he's posting some pretty good content. So let's dive into this. So the liquidity problem in prediction markets. Following on from my first article, this post, the second of a Planet 5. Okay. This is a series. Prediction markets aside, understanding both of these concepts is hard a prerequisite for success in professional trading. So as such, it is applicable to any reader who has interest in any subject trading adjacent. Yet, despite the length, what follows is ultimately only an introduction. Okay, let's get started. The usual disclaimer. Okay, so you made it to the first round of this Jane Street Quantitative Trader process. The bright lights of 250 Vesey Street, New York, the mecca of finance. So glisten before you. A future of high finance, seven-figure bonuses, and eternal clouds on campus. If you can just
summarize. Because he's writing a story. It's like this reads like it should be in a newspaper on a Sunday afternoon.
Right. Yeah, let me go.
This is labor. Okay. He's really laboring it. My attention doesn't work that long right now.
Okay, so the problem that the problem that he's going to talk about is adverse selection in trading. So in a sentence, adverse selection is the following: conditional on someone else agreeing with you to trade when you have made a market. You should now be less certain that your trade was good than you were before you traded. because the person who traded with you likely believed for some reason that you mispriced the product. That's interesting. So this
Well, that's all
smarter,
markets are, is who believes they've priced it accurately, right?
unless you're kind of a buy and holder, which not it doesn't work for
That doesn't
prediction
work on
markets.
prediction markets, right?
Prediction markets, no, yes,
That works on assets, but it doesn't work in
for
prediction
prediction
markets
markets at
when
all.
it's event driven and it has a resolution date.
The smarter your counterparty, the person taking the other side of the trade to you, the worse you should feel about the trade. Okay, in the limit case, if a sufficiently smart counterparty trades with you, you should assume that the trade is somewhere between slightly and completely losing. It follows that when you make a market, there are some counterparties who you effectively never want to trade with, as they will not trade with you when you are right, but will always pick you off when you're wrong. Conditional on them trading with you, you lose. That's okay. That's a good point. That's interesting.
I suppose that's what everybody wants, right? There's just some
Yeah.
people who are a bit better at it than you,
Yeah, they have special information.
or they can
Maybe.
understand the rules when they read them in prediction markets.
Maybe, yeah.
People
We
don't
discussed
really
about
care.
the rules yesterday. So no holistic understanding of trading is complete without the idea of adverse selection. The concept is exceptionally deep. As an example, it allows you to understand why the oft repeated logic of cash secured puts being an inherently winning trade, because I would love to buy the stock at that price anyway if it goes that low. It's completely wrong. If you think you understand why, let me know in the comments of the post. It should also help you understand why buying options without a very sophisticated justification for the specific option being mispriced will, on average, lose money. Who's your counterparty? Is there adverse selection trading with this counterparty? Who knows more, me or them? This is the question. Who knows more?
Yep.
So this is funny. Okay, another fruitful way to frame adverse selection. When you receive an opportunity, why has no one take it already is any good? Okay, this is what I've been talking here when I say there's no opportunity out there. What information did others have that caused them to pass on this trade such that that you now have the opportunity to take it? So if you are an options trader at SIG and someone comes to you, make an offer that you know IMC have already been offered and refused, Optiver have already been offered and refused. So your strong prior is that this trade is bad even before you know a single detail of the trade itself. This is
Okay.
the point.
This is the same with investing in startups, right? If you know that somebody else said no, you might say no, but without even doing any due diligence, right?
Yeah.
Like that's it.
Yeah.
It's generally like, oh, so they're basically copy trading. It's copy trading at a very high level. And startups that can happen to startups when they're going to go around.
That's it.
Actually, one of those VCs we actually spoke to is basically a copy trade VC, because they don't invest unless somebody else puts a whole load of money in.
Yeah.
They're copy traders.
They're copy traders.
They will remain nameless because they were nice people.
Yeah, they were cool, of course. So because if the trade was good, you would never have been offered in the first place. That's my point. Someone would have taken it before you. That's my point when I talk about opportunities in the market. That's it perfectly. So this framing is not as pertinent for prediction markets, but it's too important to omit. Okay.
So let me give a good example of that. See if you're doing hourly or minute or 15-minute window trading on crypto on Polymarket. If you're not exceptionally fast and getting in there when it's still in the kind of 50 to 60 zone, like you're buying late because so many other people have came in already and bought the trade. So it's like, that's an example. You're paying more for the right answer because everybody else is already aped in. Also the same with startup investing.
If there was a good price, why is not everybody rushing to
Well, everybody does buy it when they believe it's the right price.
Yeah.
There's a great little picture. I don't know what sort of animal it is, but it's very cute.
Quota. It seems the quota. I don't know if the quota is an animal whose native habitat is Australian Island, which contains no natural predators, making them fearless and friendly when encountering unknown species like humans. Quota are very cuddly, but they will be driven as synced on a trading floor. Okay. When the James Street trader asks you to make him a market on the number of coffee he has had today, you miss the point by happily giving him a market. You instead ought to immediately clarify to him that you know he's trying to pick you off. By fulfilling his request, you are making a market for a perfectly informed counterparty. He knows how many coffees he drank, and he will only trade with you if that value is outside your market. He's not obligated to trade with you, and he knows the exact answer. He can only make winning trades. Did I hear Lord Miles here? He actually tried to give you an out with his suspicion. That was good. That was good.
That's a good one. You guys,
know.
we're live. We're live. We're actually this funny and sharp. We're actually this funny and sharp. We don't make up scripts.
So
You can ask any of our guests outside of this. We just fucking rapid fire on these. We haven't looked at them properly before. We just checked the content and said, this looks interesting. Let's talk about it.
This is Lord Miles all over again. So he's hoping that you ask the meta question of whatever you should even be providing liquidity at all, that you by nature possess that latent paranoia which separates you from the quota. We will return. Okay, so market making and toxic flow. This is interesting. I mean, it's long, but it's kind of interesting. So market making solve an economic problem. So basically, market making is about adding liquidity to markets, so markets are more efficient and more people can, especially bigger players, can trade them. But you have to have incentives to put money in the market, right?
Efficiency basically means you can buy and sell, get in and out of the trades, and things. The deeper the market, the better the pricing, right? Shallow markets can be swung very easily by buys in different directions. So having good market makers in there, making sure there's enough liquidity in that market, makes it better for you to trade in, and you are less likely to get rugged.
Yeah, think about liquidity as how easy it is to trade without moving the market. I mean,
yeah.
So if you have a house, there's no liquidity. I mean, it's hard to sell. If you have gold, okay, it's better. If you have Bitcoin, USDC, you can just go to an exchange and sell that at any time.
Perfect.
So market making solves the economic problem known as double coincidence of wants. So where a trade can only occur when two people are willing to exchange goods with each other at the same time and for similar prices, Market makers stand ready to bridge the gap in time. Person A wants to sell stock 1 now. Person B decides later they would like to buy. That would otherwise prevent the trade from occurring at all by posting bids and asks for product prices they are willing to buy and sell it for. They are the heart of liquidity provision. A year ago, Citadel Securities traded more than 450 billion notional on a single day. Dude, that's freaking ton of money. And their presence in the market is why bid-ask spreads is a Bitcoin USDC are usually 1 cent wide versus periodically 100. Okay, I lost myself here. But anyway, the thing is, for example, if you guys recall some years ago when Michael Saylor started buying Bitcoin and they used a trading strategy to not pump the price. So you make small bits, you buy small chunks, because if you get to the market with $450 billion to buy Bitcoin, you will pump the price and you will pay way more than you should for buying that asset.
Another example is when Tesla started buying Bitcoin in the last cycle. It didn't move the price because they were doing it through multiple brokerages. And there's another sort of thing going on with Bitcoin treasuries right now where we're seeing super duper high net worth billionaire Bitcoin OGs not selling it into the market, but selling it into Bitcoin treasuries in order to release the capital that they want without destroying the price. So, yes.
Yeah.
Oh, and then another great moment for crypto in last cycle was when Terra Luna dumped billions of Bitcoin into the market and just decimated it. So that's what happens if you buy or sell too quickly in one big chunk. It affects the price in either direction. It's really shitty. So if you're genuinely looking for market stability, you're not going to go away and do that. But if you are panic selling, that's why we see massive dips.
So as more money there is in the market, I mean, people willing to buy and sell. I mean, there's liquidity of the market, so it impacts less the price. So basically, he talks about he gives an example here about he says a toxic flow. It's a counterparty who has more information than you, so of course he can take more advantage of that trade if that's the good moment to trade or not. So with that new information, the true fare was now completely different. Yes, of course, who has better information can get a better price. So unlike all the other trades you made prior, these ones had adverse selection. So much so that they wiped out the profitability of tens of millions of trades you made beforehand. So the art of a profitable market making is trading as much with people who don't know more than you. Okay,
Yeah.
if people know more than you, they will get better price. While minimizing your exposure to the sharks who will wait until they know more than you and then bet the house against you. That's
Yes.
it. So this is a tricky balance and requires the cultivation of a latent paranoia. At every moment, the specter of
I love
adverse
that.
selection words.
Love that. That's fucking excellent. Yeah.
Yeah, I like the way he
This
writes.
is for the like people with PTSD, depending on what way it goes, is like probably really well geared to that. The level of paranoia that they have around things might keep them safe from that sort of shit.
So why is someone buying a lot of this? Are they more informed than me? Then I should adjust my price to reflect what they are telling me? Or are they naive and actually mispricing and thus profitable to trade against? Then I should keep my prices where they are. How do you classify which type of counterparty you are against? Usually you don't know. So finding the answer for these questions is the quest worth billions of dollars, of course, yes. So for high frequency trading markets, drawing the toxicity distinction is a matter of life or death. Obsessive pursuit of these questions has led to various technological innovations, such as quote cancellation. The quicker you can cancel your quotes, the less vulnerable you are to toxic flow. And so cancellation speeds have been reduced to a game of nanoseconds. He's talking about when prices move really fast and you can cancel your orders in an exchange. So
This is very old stuff. Like since stock markets went digital, being able to cancel things in a blink of an eye is incredibly important, or buy things in a blink of an eye.
Imagine you have to call your broker. Oh, cancel that order. Oh no, sorry, it's too
Yeah.
Other innovations such as methods of hedging, an idea which should be familiar to most traders. We will leave until the third article. Yeah, let's go. But this hedging part here, something that people totally ignore. I mean, the risks. People only look for the upside of what they're going to do.
They would be the to be nice about it. They would be the unskilled trader, right?
Unskilled
the
trader,
ones that don't
for
necessarily
sure.
have discipline, aren't really looking at their P&L. And I'm saying
The
this like I'm an unskilled trader.
The 87% who lose money on poly market. I'm part of that, by the way.
Yeah.
So, but in
Am I
light of
all
the,
right?
I'm kind of, I'm on average. So, but in light of the two anecdotes of our protagonists, we can draw two conclusions. Okay, one, the business of market making is only profitable with the right toxicity ratio or ratio of retails to sharps. In the limited case, imagine a market where the only participants are really informed traders, like our Brazilian oil counterparty. Shout out to Brazil. There are no retail uninformed participants. The toxicity ratio is infinity. These traders, by definition, will never trade with you until they have an informational advantage. They will flow. Their flow is all signal and no noise, conditional and making a trade. You expect to lose money every single time. But if this is the case, market making is a doomed proposition. Any liquidity market will always have clever, informed counterparties who constitute toxic flow. A market maker needs enough uninformed traders to compensate for the losses they will inevitably lead to sharks.
What's another name for uninformed traders?
Retail.
Yes.
Retail traders.
They need retail. Hence why Robinhood
Everybody.
they love Robinhood. Whole bunch of uninformed traders.
So yeah, if you're seeding money to any particular market, let's say, You want retail, you want the small guy who's just there for the fun, for the hype, to put money in the markets. So you have more chances of them to lose. So you can make.
It's a wealth transfer.
Yes, yes, it is.
The
It's
capitalists listen won't like what I just said.
it's a PvP game. It is.
Yeah.
So two, even with the right toxicity ratio, market making is still only profitable if you can somehow mitigate the magnitude of the losses when you encounter toxic flow. In the Brazilian oil stock example, despite an infinity of retail flow, the size of the toxic flow was such that it wiped our protagonist out. If we had been able to withstand the losses, whether by being more clever about recognizing what was happening, having automated algorithm max position sizes, or something else, then he could have leave it to market make another day. But it didn't happen. As a teaser for the third article, imagine a market structure which, by design, makes it reality really difficult to limit the magnitude of losses coming from toxic flow. Oh, might a design substantially impact the viability of market making at all? Okay, so tomorrow or the day after, we are going to cover part two of this. So this is interesting. Semaji, I don't know who Semaji is, a former FTC quantity trader. Okay, so he has
We
some,
would like to like it would be actually better than reading his articles. It would be good to see if he would come on. He doesn't have a badge. So
he
like
doesn't have a badge.
by the way, we've noticed that people who end up with badges stop talking to us about coming on the show.
Yeah,
Because I don't think they're allowed to because we are a prediction market. But yes, Samaji's cool. Maybe if I jump into prediction art and ask if anybody knows Samaji or if he's in
Yeah.
here. Anyone know Samaji?
Yeah, let's go. I mean, let's try to invite him to the show.
Yeah, that'd be
Talk
cool.
more about this. I'm gonna save this one for tomorrow, and then I'm going to good. So good. As yesterday we were covering his contents here, and now he's talking about the prediction market super cycle, which seems pretty interesting. So the prediction market super cycle theory. Super cycle theory. What happens when prediction markets finally break out? When speculation, governance, and information all merge into one seamless layer, and where every event, policy, and decision can be priced in real time. That's the prediction market super cycle. What is a super cycle? In markets, the super cycle is a period of structural expansion, not just price appreciation, but a fundamental shift in adoption, infrastructure, and capital flow. In crypto, people use it to describe multi-year waves of innovation and liquidity, when technology, regulation, and culture align to trigger exponential growth. Bitcoin had done, DeFi had done, AI is in one right now. Prediction markets are next. Why prediction markets are next? For years, prediction markets were stuck in limbo, low liquidity, regulatory gray zones, clunky UX. Quick UX, I mean, I didn't see a lot of UX changes in poly markets and Caution,
No.
but we are seeing a lot of new projects creating new functionalities in like front ends for
I'd arguably say, due to the shifts in technology over the past few years, the biggest problem in any product, well, one of the biggest problems, right? Obviously, you've got back end and actually making it work. But UX is such a massive lift, like as you get into it and trying to make it easier and easier, and you can only get it so easy, right? Because Web 2 is done to death. There's no changes given the technology that we've had over the past 20 odd years that has improved UX to the point where an idiot could use it. I mean, they've made it very easy. And crypto is basically just building on that. But I think fundamentally the next wave in UX is actually getting rid of UX and using bots and using chatbots. And I think that's the next interface. It's the next interface of search for sure. Like I use a search engine a couple of times a day, whereas I would use it many, many, many times a day. Now, if I have something that I need to understand, it's a language model, right? So I'm just starting to get to the point in my mind where I'm like, the future isn't clean UX, easy UX. It's asking a bot to go do something for you and giving it the permissions to go do it. So it's agents essentially. So I think that's the future of it all.
Yeah,
and I think we're at the point where we can start implementing that stuff. Like we don't need the next generation will want it, will expect it, and don't want to press buttons. They want a machine to do it for them based on, a voice command or type
voiceover. Yeah. We were
even the Telegram chatbots with the yes or no. Fuck that. Like, go buy me this on that and now. Right? That's because that's where I want to be. That's AI's here to abstract all the complexity that we've built over the past fucking 100 years.
That's true.
Rant done. Rant over.
As infrastructure matures, better oracles, faster chains, compliant frameworks, we are approaching an inflection point. The New York Stock Exchange parent company, ICE, one of the most powerful players in traditional finance, just announced a $2 billion strategic investment in Polymarket, evaluating it at $9 billion. This is not a startup story, that's a macro sign-up. Is the clearest validation yet that prediction markets are becoming financial infrastructure? That's true.
Is it becoming financial infrastructure? Because for me, it just seems like a layer. It's financial layer. I don't know. Like, I guess it comes back to: do we end
considering
up with
financial infrastructure in the
liquidity, and we build on top of it?
I'm considering this expression is in a loosely interpretation of financial infrastructure. I mean, it's part of the bigger financial system.
Yeah, you know how sometimes I take things a bit literally, and I'm like, because I'm thinking what infrastructure actually looks like, and it's not user experience.
No, we are not talking about like.
But with the way that they're saying we're going to build apps on top of our ecosystem, then it does start to maybe look like an infrastructure layer. Or it's just an infrastructure layer. The infrastructure is actually the blockchain in Polymarket's case, and soon to be Kalshi, as we imagine.
Yeah. So phase one of this super cycle, phase one ignition. Event perps go live on high throughput chain. Aggregators pull liquidity from multiple venues. Social overlay surface sentiment directly into odds. The first prediction indices start forming. We talked about a Groovy prediction index, right? So perps made people fall in love with leverage. Dude, that's dangerous. That's dangerous.
Yeah, so this is the tricky thing, right? So like the betting industry never really had leverage in that way. So what happens? I know people don't like to use the word betting, but they're like, if we look at Polymarket's original site, I mean it's his bet. It's his betting, right?
It's his bet.
And some of the stuff is still his betting, right?
Yeah.
So I'm just going to see if I can pick that up.
Yeah, they rephrased it. Why we looked at they rephrased that. But so attentions became a tradable asset. So that's true. This is what we are seeing right now. But so I mean, we discussed this. I mean, you should understand what you're doing. You should study what you're doing before you do. And people are playing around with perps as that was good. I mean, there's a use case for.
Really believe that way. Like, it's a bit of both, right? I'm an experiential learner, right? So I have to go spend when DeFi Summer came, I fucked away loads of money just trying out all these like banana protocols and iKebab. That's what I remember. Kebab, when all the food, right? I went through the whole food group. And then even during ordinal seasons, like Jesus Christ, the amount of Bitcoin that I spent relative to what I could be holding now is insane. And ordinals is ruined and runes are dead right now. And I recently have been asking Bitcoin people, like, how does that actually return? Because I don't see how runes and ordinals make it back right now. I think there's so much focus on the asset, the Bitcoin asset.
They don't return, sorry, man.
I don't think they do. They do. They might become some of the stuff that I've got might be looked at as like artifacts, as in like, look what happened on chain. So like Pizza Pets, really interesting Tamagotchi on chain. It's like, so maybe these things, like my great grandchildren, they might be very valuable to them, but not to us.
Yeah. No. Hopefully they will have some value. So, but anyway, I mean, go there, go try perps, go try prediction markets, and we actually incentivize, go try prediction markets. You can try Groovy for free. I mean, you can go to playground.groovy.market, mint some fake money, create your markets, play on markets. Or if you want to use real money, go to Polymarkets. Place $1 bets. This is what we do. Place $1 bets, and
I think the point with
if you
can Groovy right now is we've left it so we can have it as a game that nobody can lose money on. But if you end up being actually good at, because it's live data, right? And resolutions are the same as they would be on Polymarket in that sense, where it's either this way or that way it's going. If you're really good at predicting it, you don't need to lose any money. And then when we go to mainnet, we'll still keep testnet open so people can come in and practice and play and not lose their cash.
That's it.
Because we don't want people to lose their cash because they didn't understand what they were doing. We want them to take some time, understand what they're doing, and then like actually trust the platform and use it.
So you can learn for free. Just use that. So phase 2, coordination layer. This is where filter key governance by market starts showing up for real. DAOs and treasuries, dude, I don't know what I feel, but I don't feel anything good when I read DAOs nowadays. So DAOs and treasuries begin making decisions based on what markets think will improve token or KPI performance. Governance shifts from arguing to pricing. We'll see live on-chain indicators and sentiment-weighted signals. Social prediction feeds embedded in dashboards. Early filter key pilots inside DeFi plus governance protocol. Okay. Not sure, but yeah.
That's a very similar thing around meme coins, right? Like if you have markets on specific meme coins, then if everybody's pumping, the market cap's going to go up. Now, if it does, then everything starts moving. But if it doesn't, and same with like NFT projects, ordinals projects, you could create a market whether they're going to what their floor price would be in 6 months' time. And people could bet around that, and it would change the perception of the project before it went live, right? So people would know if it has actual hype or fabricated hype through bots and KOLs and stuff like that, right?
Yeah.
Not saying KOLs can actually drive real hype, but if it's like bullshit hype that's from frankly yappers and nonsense and it just looks noisy, then you're not going to see a groundswell of yes, this is going to have a floor price of half a Bitcoin, right? That's not going to happen because nobody believes it. So I think it's a really good information tool to help people mitigate the noise that is in crypto Twitter, for example. But DAOs, I never thought the DAO example is a really good example because it's more of a peaceful. Wouldn't you like to see that in your actual government, and then the actual government actually make decisions based on the sentiment of the vote?
Yeah.
Or I guess that's where like an infinite prediction market comes in. Like, do you like your politician?
Yeah, but for this scenario, we will need to see kind of it comes to we've been discussing here what makes a good market, a good prediction market, a good market. How many people are trading, the volume, the total liquidity, the size of the predictions that we see there. So how much you can trust on that data actually. So the phase 3 will be infrastructure build out. So markets maturing in structured products, baskets and spreads of related predictions, cross-venue hedging. This will be interesting. Under collateralized lending versus open prediction positions. I don't know what is open prediction position, but yeah, I mean collateralized lending. We are about to see this. Text tooling in report much text tooling. Yeah, that will be necessary. On-chain ETFs for prediction.
I don't think we need tax tooling as a priority.
But I mean it's phase 3. Phase 3.
You just download your history and send it to your accountant like every other person in the world.
Municipal and corporate filter keep pilots take off. Oh fuck no. Okay, no ETFs, dude. I know. I mean, it's really big how people use ETFs to invest in the US. I don't know if God is in the US, but dude, in the end, ETFs. I mean, most of the times you are paying someone to take care of your money.
The ETFs are for boomers, and unfortunately, boomers are holding all the capital right now in the world and all the decision making. So they're exclusively for those people and people who don't actually care. Like the Bitcoin ETF, like I have people who could have bought Bitcoin years ago and they didn't do it because they would rather have an ETF, right? Because but they don't understand the underlying value of holding Bitcoin. If everything goes to fuck, you can still buy your way out of a country. Whereas with an ETF, you're going to zero, and your money's going to be locked up if something goes wrong.
The problem with ETFs and funds in general is that who are buying them? It's basically retail. How does
there's retail and institutions, because institutions buy ETFs as well for hedges and stuff like that.
Yeah, but
right. So it's not just retail, but retail will like them because it makes it easier because we just got an ETF in the UK, or a sort of variant of an ETF in the UK, which we've been fighting for years. I think it was like 2001 they banned them. Like fucking this country is ridiculous, but they banned them, so like nobody could get in. And then when they launched them in America, they're still almost a year behind them.
Yeah, I mean, it's just stupid to ban these kind of products. I just don't think that. So if you have a minimum
what they're doing
knowledge,
is protecting the customer.
yes. But
remember our conversation
yeah,
yesterday?
yeah,
Protecting the user. No, you're not. You're fucking.
My point is basically, I mean, if you have any knowledge of what you're doing, buy the assets. Don't buy ETFs. You can buy 100 of assets, not a problem. Don't need to buy an ETF. Anyway,
and if you're buying gold and stuff like, you don't need a gold ETF. You just you can have gold.
Fuck?
You can have gold held up somewhere.
Dude,
like
Bitcoin. Think about Bitcoin, a Bitcoin ETF against a Bitcoin. You just buy Bitcoin and that's it. For a Bitcoin ETF, there was a manager, basically managing that. And my point about retail gets in when the price goes up. So when retail gets in, the price go up. What the manager does? He buys more Bitcoin. So the ETF and the funds are buying the assets at the higher price. And when the price crashes, retail gets carried. So they run away. So what does the manager has to do to pay back the money? They sell. So they buy at a higher price and sell at the bottom. And they are doing this with your assets all the time.
Yep.
So just buy the assets. Don't need to have someone doing that for you. Anyway, so cities or DAOs funding projects based on market-derived confidence, which is kind of a pool system, but a more efficient outcome than pools, because prediction markets provide that. Standardized Oracle plus disputed layers make outcomes universally trusted. Maybe, but maybe if we have different system resolutions, we could compare the sources of truth. Okay, what's the better one? If we have only one standardized, how can we trust them? I mean,
yeah, I don't believe we should be going for one standardized procedure right now. I think that's we have to test many variants and see.
Yes.
The thing is all of this is open to attack vectors, so you need to figure out what the attack vectors are and have trade-offs, because no single version is going to be good. And also, maybe a standardized one works for somebody like Polymarket or Kalshi, who are absolutely gigantic and have really deep markets and loads of liquidity. But maybe smaller, more niche ones don't need that level of infrastructure to operate. They can be much smaller and more nimble. So I think actually there should be, and I think this with everything, there should be various protocols and projects for specific needs.
Yeah. So phase 4 integration. So crypto's borders dissolve. Prediction protocols plug directly into retail, brokerage, fintechs, and social webs. Your wallet's position can collateralize perps or options. Prediction contracts become building blocks of risk management.
2 minutes. And in the chat and thingy, we've got Meme Coin Predict, our guest yesterday. Just like, you buy physical always, be it Bitcoin, gold, silver, whatever, right? He's like, he understands. That man knows. He understands.
Yes, he understands. He's been around for a while.
He knows.
Shout out to you, my friend. Unify identity in your customers' standards, mean real world adoption. Apps and bad prediction layers. Dude, he's trying to predict the future here. I think it's interesting, but it's just too far ahead. Anyway.
Yeah, I guess it's thought leadership, right? And thought leadership does always need to be very far ahead of the curve, right? Like there's things that we have now that wouldn't have happened if somebody in the 60s didn't decide that it should happen that way, right? Like that's what thought leadership is. That's what he's going for. So
yeah,
it's fine. But I guess we're thinking right now, we're like, do you know what it's like building right now? It's like mental. There's so many things that you need to do in so many ways.
Yes, it's so hard to build the things that we are building right now. It's already hard. So I mean, it's exciting, but dudes,
the industry needs way more builders. That's basically it. The vertical, because this isn't the industry, right? Prediction markets are a vertical, but this vertical needs more builders, and I would say a lot more infrastructure builders right now, so we can have some really interesting shit in the future, particularly around oracles.
Exactly. So the super cycle will be completed at the end with market governance and information merging. So prediction index funds exist, traditional wrappers, on-chain ETFs and cross-margin, unified crypto and TradFi. Government DAOs and corporations make decisions through footer key pilots. Insurance, reinsurance, and capital markets all share prediction liquidity. This is what a prediction market super cycle looks like: liquidity everywhere. Every narrative becomes tradable, data feeds evolve into alpha. I mean, yeah, I tend to agree with this, and it just corroborates the fact that we are not on a prediction market super cycle at all. We are so far from everything that's laid out.
Was it John Woo or John? What's his name? The guy from
John Wang.
John Wang was like banging that narrative for like 2 weeks, and then everybody was just like, "Shut up, we're not there." It's just like, so he stopped saying it because we're not in the super cycle. We're really we need dozens and dozens, hundreds potentially more builders in the space to be in a super cycle, right?
Exactly. I'm not sure if the super cycle will look like this. I would say even before this, we could consider a super cycle. But dude, we are so far from most of the things that he laid out here.
If you go down that point about liquidity everywhere, and again, like we have some plans to solve a sort of grassroots liquidity pool for each market, right? Unless that happens, it's not liquidity everywhere. I tend to believe, although I don't think it's healthy, what Arseni from Gondor said. Kalshi and Polymarket will end up like liquidity pools for everybody else.
Yeah.
And I don't think that's again back to centralized liquidity, even if it's with 2 people, 3 people, 4 people. That's still there's still centralized players owning all of that shit. I don't care if Polymarket's built on blockchain. It doesn't matter. It can still be a centralized thing if it's built on blockchain, right? And I think the idea, like DeFi, is not properly solved grassroots liquidity, because when we had the LP tokens and all that being issued last cycle, DeFi summer cycle, that quickly came to the point where anybody could get in at any price. To you need 10k, then you need 20k to make any money, and that money must mitigate the risk as well, because the protocols could get hacked, and in fact did. I think by the end of DeFi summer, I think there was like 90 billion in total value lost. How about that, TVL? So that's this liquidity thing is a huge fucking problem.
It is,
and we're going to end up just with loads of centralized liquidities, which isn't very crypto, right? But a lot of people don't care. They don't really get to the root of like why like a lot of them have never read the Bitcoin white paper. They don't understand why decentralization is incredibly important. And decentralization for me isn't like going to happen overnight. Like if you're trying to replace a banking system, you're looking at 50 years. And that's what Bitcoin's trying to do, right? Wouldn't it be great if our kids never grew up with a centralized banking system and no central banks in the way they are, right? Hopefully no infinite wars. Anyway, off track. Liquidity requires more thought, more clever people getting involved and figuring out how do we draw liquidity from the community and the groups. And for example, crypto Twitter, like how do we get liquidity from those guys instead of going to big VCs, hedge funds, or whoever it is, just general market makers to provide liquidity, because it's not scalable for the small guy to do that. And we'll just get more of the same, more Polymarket, more Kalshi, more competitor number 3 who's plugged into the VC world. Nothing wrong with VCs in that sense, but traditional VCs think a certain way. Crypto VCs do think a bit differently.
That's it, Nick. I think we are.
That was a long ass one. It was like an hour and 20 minutes.
Almost 1 hour and a half. Dude, and I thought that I didn't have a lot
bored
of things
listening
to
to
talk
us. Fucking bored listening to us.
So shout out to everybody who joined us. We will be back tomorrow. So thanks for listening to us. Before we go, just make sure follow us. Go to playground.groovy.market, create your own market, play around with Groovy. Let us know your feedback. Send us a message. Our DMs are open. Make sure to subscribe the $1 trade www.substack.com. It's the daily newsletter that we put out. And next Sunday we are going to have a live stream. This is the Clash of Fans, the first episode of this series, to talk about Liverpool and Manchester United match. And we are going to have prizes. We are going to have a competition for top traders and top market creators. Make sure to join us on that. And tomorrow we will be back. Thanks a lot for joining. Thanks a lot for tuning in. See you all, guys, tomorrow.